accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people. Good morning. This is Bloomberg Quint Live, India's first digital live streaming business news service, and I'm Menaka Doshi.
And you're watching Indian Open, and I'm Neeraj Shah. Morning, Neeraj.
Morning, Neeraj. Morning, Menka. Let's get straight down to the headlines. We've got macro cheer for the Indian economy. Industrial output rising 4.3% in August. Retail inflation flatlines in September. Bharti Airtel bails out Tata Teleservices by taking over 4 crore mobile customers and a part of the outstanding spectrum liabilities in what will otherwise be a cash-free, debt-free deal. IT heavyweight TCS beats estimates in the second quarter, driven by client wins, digital services. It's going to be all about gross refining margins and Jio's numbers when Reliance Industries comes out with its second quarter earnings later today.
Boy, is it a heavy morning. Good morning,
Yeah,
Neera. Good morning, Menka. And, just when we thought that a morning can be devoid of large cap news, there are some 3 or 4 or 5, and there's so much to talk about.
Oh, is that what you were referring to? I thought I was just referring to the fact that it's Friday the 13th.
That too. We'll hope that the markets don't follow that. I think after yesterday's trade pattern, people are hoping for highs. But hey, guys, okay, let me start with that since you brought that up. Look at what the market has done in the last few sessions, and in yesterday's trade, there was some heavy delivery-based buying. It was almost as if participants were anticipating good macro data, maybe good numbers from TCS, and expecting great numbers from Reliance. Because if you look at across the board, I was looking at the heavyweights which participated in trade yesterday, and then the delivery percentages substantially higher than what you normally see on a 10-day basis. Reliance Industries, 45%. That's not normal. Trust me, that's not normal. HDFC Bank, 48%. TCS, 66 percentages marked for delivery. That was some serious delivery-based buying that we saw in heavyweights, which contribute to the index yesterday. And then I thought, okay, let me look at the mid-cap since I had time in my hands. And I was looking at the kind of run that some of the mid-cap stocks have had in the last 4 or 5 sessions. So the rallies are strong and they are continuing. And these are not Johnnies. Adani Transmission news-based, 27% the last 5 days. Sterlite Technologies, not a small cap name by any stretch of imagination, a stock which has had a rally, 23% move in the last 5 days. Indoco Remedies, symptomatic of what's happening to pharma by and large, 21%. GHCL, 18%. HSIL, one of the largest sanitary ware players, 16%. So the rallies are not 3 days and then getting sold on. People are actually going out and buying and consistently buying good quality mid-cap names, which is the index which is already at a premium. So there is some serious buying that has happened. We might be crying foul about valuations, but there are pockets in which people have bought and continue to buy. So that's it.
I hate to sound cliched, but is this your standard pre-Diwali rally?
Well, you never know. In fact, I read a report on Monday or Tuesday on our site wherein somebody had mentioned that typically Diwali also tends to bring in some bit of lackluster moves if you take the whole month into account. I don't know if this will be followed by some bit of a downtick. Hope not. But yeah, for now, looking at all the macro cheer, and I'm sure Ida will speak a lot about it, we might well be in for a sentiment booster as well. So here are 3 or 4 things that we need to keep in mind. Aside of the markets, of course, one, whether the BSE Cap Good Index can actually show some performance post. Well, we don't know if it's a flash in the pan or no. Ida would be a better judge, but the IP numbers are pretty strong. So let's see if the BSE Cap Goods participates today. Bharti Airtel, consensus. Everybody said that there will be an uptick. Morgan Stanley says it could add 35 rupees to the share. I think Credit Suisse says it could add 80 rupees to the share. I mean, the higher side estimates. So you don't know, but suffice to say, it'll add something to Bharti Airtel.
It's a good deal.
Yeah, it's a very good deal.
Actually, for both parties involved, one might say. So.
Yeah. So Bharti Airtel, not a heavyweight, 1.5% weightage on the index, so you don't know how much it will add to the Nifty, but suffice to say it will react today, so watch out for this one positively. TCS, my personal view is that it may not really react too much. Yes, I know the headline numbers are that they're above estimates, but constant currency was below what the street was anticipating, and it's trading at 17 times FY19. That's not cheap. So it may react a bit today, but I really doubt that there is a sustained rally out here possible. The management has said the commentary is positive, but you would probably doubt with the valuations that TCS can really give a big spur over the course of the next 2 or 3 sessions. I think Reliance is the key, but this month it has rallied 11.8% already. Can it do more in the build-up to the results and post-results? That's the question.
You're watching the stock. I'm watching to see if they actually finally put out geo numbers or not. But that's what we've got for you on First Word today. Let me quickly run you through that. We take you through the fine print of the TCS numbers and what analysts or key voices think about that. Then we've got the latest macroeconomic numbers that seem to suggest a healthier economy, but should one read too much into them? Reliance Industries is expected to put out numbers today. Hopefully we will get more on Reliance Jio's financials. That's what we're watching very closely. And finally, how does the Airtel and Tata Teleservices deal change the telecom market dynamics? We'll be talking about that, and joining us will be former Airtel CEO Sanjay Kapoor. All of that coming up through the next 20-25 minutes or so. Let's start off with TCS.
Yeah, so good start to the innings, as we said. The country's largest IT outsourcer has delivered numbers on the margin front much better than estimates, but let me not steal the thunder from Agam. He's done some interesting analysis on the second quarter numbers. Agam, what's particularly standing out for you?
Well, a 1.7% quarter-on-quarter growth in constant currency basis for TCS. Neeraj, you've already mentioned it's a tad below street expectations. But let's break these revenues down and see what the management has to say about the key revenues. Now, this, of course, has been clubbed when it comes to some of these segments. But let's start off with the BFSI segment. It's about 40% of the revenues come from there. And we have seen about a 1.9% constant currency growth in this segment. Now, the management has said that they are now past the fear of financial technology disrupting traditional financial services, and while visibility is low in the near term, they are partnering with their clients and working on new models. It may take a bit longer to identify which is a model which could be successful in the future, but for now they're still working on it. And that said, when you look at Diligenta, that continues to see momentum going forward. Of course, moving on, the other crucial segment is the retail segment. That has seen a lot of weakness in the past, but this time around too, and we have seen about a decline on a quarter-on-quarter basis, but the management suggests that this segment has bottomed out, and from here on you will see improvement gradually. Of course, the other segment is communications and media. That also provides a good 17% chunk when it comes to the overall revenues. And once again, that has seen about a 4.5% growth, and we continue to see momentum. But coming down to perhaps the most important question: how does TCS position itself when it comes to its digital services? Well, this is how it works. Given the fact that about a 20% of its revenues come from digital services. We're looking at, given the fact that about 20% of your revenues come from digital services, it will work across all sectors. And while on an overall basis, we are looking at, largely in line numbers. We'll wait and watch as to what the management has to say, but we're largely constructive when it comes to its outlook.
I'm sure brokerages probably said the same thing as well. Agam, thanks for putting that into perspective. So 3 or 4 things that Agam brought out. Let's take this discussion forward with Bhaven Shah, founder of Samiksha Capital, as well as Moshe Khatri, managing director at Wedbush Securities. Gentlemen, good morning, both of you. Thanks so much for joining in, or good evening to you, Moshe, maybe. What did you make of the commentary, Moshe? You can fault them for missing out on the constant currency performance, but you can't fault them for the commentary that they gave and the optimism that they've shown with BFSI and the other key verticals for the next few quarters.
Yes, from our perspective, the theme this quarter, and I think it's been the theme probably for 2 quarters in a row, is stability. It's not bullish, it's not negative, but it's stability. And for a group that's been going through multiple resets and disappointments for a couple of years now, this is probably more positive than negative. So on one hand, it seems that there's more action that's getting done in terms of focusing on building the digital business, transitioning away from legacy, etc. That's a good sign. Now, in order for us to get really bullish, in order for us to kind of understand what happens, whether retail picks up or financial services does pick up, we're going to have to wait for probably another month and a half, 2 months, just until we get a better feel on the next budget cycle that looks into calendar year 2018. So, as I said, for now it's stability. I think financial services for TCS probably did a bit better than expected. Retail may bottom, but again, a lot of it really depends on the budget cycle for next year. What's interesting is that we've hosted a call with a company called ISG. ISG helps enterprise clients that are in the process of outsourcing either their back office processes or their infrastructure. And they said two things. They said, look, we're definitely seeing robust demand in digital, but we're also seeing a lot of the legacy companies building solutions around their digital, which is offsetting some of the cannibalization they're seeing for their legacy business. And then the other thing ISG said was that we're seeing some growth on the traditional business just because your typical enterprise is not going to get rid of its mainframe. So these are all probably signs that you're going to see some positive mitigating trends to the cannibalization that you're seeing overall. And I think the net result is stabilization, which is what we're seeing right now.
Okay, stability is what Moshe is saying. Bhavin, take the clock back last quarter, everybody was saying Infosys margins after a long time better than TCS. TCS has come out and delivered a very strong operational performance. The commentary is strong for the quarters ahead as well. What stood out for the most for you this quarter, and are the valuations cheap enough compared to the commentary for you to advise your clients or you to buy into TCS at the end of this quarter for the next 6 months to the next 18 odd months?
So I think what was positive was that the large clients, 100 million plus, there was a deterioration last year. That has recovered last couple of quarters. And there was a lot of strong increase in the 50 million plus accounts, so which perhaps supports the management's enthusiasm expressed about upcoming quarters in terms of revenues. I guess what I don't see is there isn't much of a free cash flow growth, and I'm very much focused on free cash flow growth for these companies because the growth itself is not that exciting. But if there is the reasonable free cash flow growth, one can count on payouts as a reason for investing in the stocks. So if I guess looking at what they have, they had a decent free cash flow growth last year. But, this quarter was actually slightly down year-on-year basis. The first quarter was up about 5%. So, I think in the first half of this year, free cash flow growth is relatively weak. Even if there is some improvement later in the year, I think we are looking at sort of low to mid-single digit free cash flow growth for this company. And, it's trading at about 5% free cash flow yield. So, for somebody who is happy with about 10% kind of return, I think this is a reasonable investment. Anybody looking for more can look elsewhere.
Okay, fair call. Moshe as well as Bhavin, many thanks for joining us this morning with your quick perspectives. Well, Bhavin out there clearly stating, Menka.
You made it sound like a fixed deposit, no?
Yeah, well.
Well, I suppose in some ways, mature companies become that unless they're able to take part in disruption and then become, what do you guys call them? Growth stocks.
Growth stocks.
Yeah. All right, then. That's TCS. Let's get to the macroeconomic picture. India's IIP grew at its fastest pace in 6 months in August, and retail inflation softened marginally last month to stay well below the central bank's medium-term target. So are the fundamentals turning around, or is this just a flash in the pan? How much should we read into those numbers? Ira.
All right, I think it was John Maynard Keynes who said that when the facts change, I change my mind. I think at this stage, we're at the point where we're trying to decide whether facts have actually changed or not. We're looking through the high-frequency data, not just the IIP numbers which came in yesterday, but the host of data that comes in every month. This is the first plate, which is IIP and core sector, because this is the most notable of the data points that came in. So as you can see, I think, the 4.3% is clearly, a jump. It's a jump compared to the last 2 months at least. We don't have the September numbers, but if you look at July, August, and September, September, which makes up the quarter. Perhaps if September holds on, you'll get slightly better industrial output, which will feed into GDP as well. A large part of the surprise, the positive surprise in IIP has come in from core sector, which is encouraging. So core sector numbers at 4.9, which came in from strength in mining and electricity, have been the positive surprise. What is leading to that? That remains to be seen. In terms of electricity, it could be the restocking, sort of reactivity that is taking place in the industrial sector. In mining, there seems to be slightly something fundamental happening on the ground. Even managements that we have spoken to here on Bloomberg Quint have said that mining activity has picked up. If you look at the breakup of the numbers and just stay with this plate for a minute, I'll just tell you that about 10 of 23 industries saw positive growth. So it's a little early to say that this is broad-based, but it is broadening out. You had capital goods doing well with 5.4% growth in the current month. You had consumer durables up 1.6%. Consumer non-durables, more notably, were up 7%. Also, infrastructure, that segment was up 2.4%. So this time's IIP number is healthy. There is no taking away from that. Earlier in the month, if you look at the next plate, you got data from the usual auto sales, that is the SIAM numbers. And I think in that, again, if you look at a 3-month trajectory, you will see that commercial vehicle sales in particular have been picking up steadily. That is a good sign. Some of it could be individual triggers, like, stopping of overloading, etc., which seems to be leading to demand for additional commercial vehicles. But if there is a demand element to it, then it's certainly positive. Passenger vehicle sales have been strong all along, so let's not spend too much time discussing that. Those are the output-based indicators. If you look at the survey-based indicators for the month, which is the PMI numbers that I'm talking about, there, you didn't get much of a bounce up in the manufacturing PMI. That was flat, but you got a good bounce up in the services PMI, which had been down in contraction territory for 2 months. Important to pick that point up because the Reserve Bank of India in its commentary had also said the second half of the year, the upside in growth will come in from services and it will come in from agriculture. So services is certainly playing to script, and that's good news. So on the output side, there is pickup that's coming in, and perhaps that will feed into a better GDP number along with a positive base effect, which will help the second quarter numbers. Then you go on to the other aspects of the economy, and that is CPI. Now remember, we went from 2.3 to 3.36. That was a jump, and it was a bit of a shocker. But then you've got flatlining more or less at 3.28. Again, if you look at the internals of CPI, which I don't have on the screen here, there's nothing that actually stands out in terms of change in trend. So if you look at the core components, all of them are either flat or slightly higher. So core inflation is more or less flat, around 4.5 if you just take out fuel and food. And if you look at the food elements, there isn't much of a change in trajectory. Pulses are still down very sharply year on year. I think it's about 22% decline year on year. That's feeding into the headline number. But on a month-on-month basis, there's only a marginal downtick. Fruits and vegetables are actually slightly up on a month-on-month basis. So I don't think the CPI numbers will do anything to change the view on the economy. But the IIP numbers, if they sustain and if services sustains, will certainly change the view depending on how many months it continues.
So this was a short-lived downturn, one might add, and maybe it was just the sort of the tail end of the demand impact and the big GST disruption.
The first quarter may have been.
Yes.
The first quarter may have been that. 5-quarter decline has been
if, of course, all your green boxes sustain, right?
Yes. And in any case, we've been saying it's a 5-quarter decline. So, the last month was a bit of a shocker because of those one-off factors. But the decline that had been coming for 5 quarters had sort of continued. Now, does it start to rebound from here on? Potentially, just on the base effect. It might. Plus, if some of these indicators start to stabilize, then you may see that 7% plus growth in the second half of the year, which would bring us to about a 6.7 to 7% growth for the full year, which is exactly what has been predicted by the policymakers.
Yeah, I suppose so. That's just encouraging.
And any previous data would suggest that winter months, food inflation typically comes off, and we will be a sweet spot there as well.
I mean, I think that entirely depends. So pulses is the problem, right? That pulses problem hasn't really been resolved. I think there was a Bloomberg News report the other day saying that, they don't want pulses rotting, so they're looking at auctioning them out. You auction them out, you depress the prices in the market. So all of that, will play out as it is. I don't think food is the big problem from here on. Now you have to see how core moves and how the sort of demand indicators will move from here on.
And also none of this data suggests that RBI needs to change its view as yet. In any fashion, right? Because you've got maybe stabilizing inflation, but then you've got maybe improving growth as well. So you might not need that rate cut that everybody's been hankering for in any fashion.
Absolutely.
All right, that's the macroeconomic picture.
Yeah. Let's shift focus
to the big earnings
to the big one.
Evening.
Country's largest listed player, Reliance Industries, oil and gas and now telecom giant will report earnings today. Sumit Sarkar is standing by with all the expectations. And Sumit, the key question is it all going to be about Reliance Jio for the commentary? And is it all going to be about GRMs for the delivery?
So it will be mostly about Jio, but when it comes to Reliance, I'll start with the first important number, that is the gross refining margin.
Which is where all the money comes from.
Yes. So Reliance Industries' gross refining margin is expected to come in at $12.5 per barrel, which is not only 5% higher compared to the last quarter, but will also be at its 8-year high. Now, in second quarter of financial year 2009, the company reported a GRM of around $13.4 per barrel. Now, leaving aside the core refining business, or as Meenka said, the cash-generating business for the company, the street will be keenly watching out for the Reliance Jio numbers. Now, Reliance Industries is expected to report the Reliance Jio number in this quarter. Now, if they report the numbers, then the foremost thing that the street will watch out for is the revenue. Now, along with this, they'll also have to see the exact date from when Reliance Industries has started recognizing this revenue. Now, the second important thing will be how much revenue Jio garnered from every customer per month, that is the average revenue per user. Now, and when it comes to ARPU, we'll also have to see where does it stand amongst its peers like Airtel, Idea and Vodafone. Now, in last quarter, that is in the first quarter of financial year 2018, the top player, that is Airtel, reported an ARPU of around 154 rupees per customer. Now, the third important thing will be EBITDA, which will also indicate how good the company is operating. Now, and when it comes to EBITDA, we'll have to see whether it first comes out with a profit or a loss and how big that loss or profit is, because this number will also impact Reliance Industries' consolidated numbers in this quarter.
But isn't most likely going to be a loss?
Most likely it is going to be a loss. Also, analysts are expecting it to be a loss.
And it really won't be. Will it be a substantial impact on the overall Reliance numbers? No, right?
That's the thing that we'll have to watch out for, how big the loss will be. If it's a big loss, then obviously the consolidated numbers could come down big. I went through a report and that showed that in consolidated net profit could come down by around 26% in this quarter.
What?
Yeah. Consolidated.
Well, okay, let's caveat that by saying that's maybe just one estimate. Yeah. ARPUs, what any range of ARPUs one can expect from Reliance Jio?
For that, we'll have to see from when they start recognizing the revenue. What is the exact date that they are starting? But the street is expecting the ARPU to be above 154.
Wouldn't they start recognizing from December last year? When would they start recognizing from? The commercialization of their service was December last year,
right?
They
should have, but then they said that they will start recognizing when they think that the services are opt and according to the customer satisfaction.
So, okay, so I think they were unhappy with the interconnect and all in the first few months. So, at least
not necessarily.
So maybe from April 1st this year. Maybe not.
In fact, not necessarily. They'll start recognizing the revenues from 1st July. They can start in from 1st August also.
Wow. So that might not give us much insight into how they're faring, really, right? And what's the total capex so far? Is 2.5 lakh crores?
Yeah, no, more than 2 lakh, 2.1 lakh crores.
2.1 lakh crores. Okay, so that's what we're watching out for. Outside of the 8-year high, isn't it, in GRMs, the Jio numbers. And, Sumit, you might want to stay on with us because we're going to continue talking telecom. The big deal that was announced last evening, in what amounts to a distressed sale, Tata Teleservices, the unlisted telecom business of the Tata Group, has decided to combine its mobile consumer business with that of Bharti Airtel. It's a debt-free, cash-free transaction. Let me try and simply break it up for you, right? What does it mean for Bharti Airtel? 4 crore customers. Now, the average ARPU, and I think the numbers range right here. Someone told me it's 140. Edelweiss put out a note saying it's 162. If that is indeed the case, then that's actually a fairly high ARPU for Tata Tele, because like Sumit pointed out, the average for the industry is somewhere between 140 and 150. Yeah, I know. So if it's 162, those are really good customers that Bharti will be getting. But like I said, I don't have a confirmation on this. These are just some estimates. 4 crore customers that Bharti gets. It gets spectrum. I won't go into the nuance of the spectrum because not all of it is liberalized spectrum. Actually, a very small amount of it is liberalized spectrum. So approximately from the 175 megahertz, only about 71 megahertz is liberalized spectrum. So we don't know exactly what they'll pick and choose from that spectrum, but they will get spectrum, and they'll get a little bit of the debt along with that spectrum. Essentially, these are deferred spectrum payments. So that's what Bharti Airtel stands to gain. what does Tata Teleservices stand to gain? You may not care because it's not a listed company, but there are several Tata Group listed companies that are actually investors in Tata Teleservices that would have stood to lose quite a bit if the company had simply been wound up in any winding up transaction. Now, winding up comes with a lot of other related issues. For instance, what would have happened to the employees? There are roughly about 4,000 to 4,500 employees at Tata Teleservices. It would have been quite a sad situation for all of them. You've got costs attached to winding up. Would there have been a fire sale of assets of some sort? What would have happened to the spectrum? Would they have returned some of it to the government? Would people have bought it? Is there even a market for spectrum today is the question you need to ask. Tata Sons says it's going to raise debt to pay back the debt that is on the Tata Teleservices books, right? So this is in effect a transfer of debt from Tata Teleservices to Tata Sons. Why is Tata Sons doing this? Why aren't they insisting on lenders taking a haircut? It's a AAA rated group. There are two reasons why they'll never do it. They don't want to ever ruin the Tata image. And the moment they do that one time, every single bank in this country goes on alert and says, the next time we loan you money, we're not sure whether you will stick to your word or not, right? So for both those reasons, smart reasons, Tata Sons has apparently said that they will take on the debt. They will raise money to pay back the debt. The details are not all clear as yet because the deal just got announced last evening. We also know that Tata Teleservices may combine some of its remaining businesses because only the mobile business is going to Airtel. So some of the remaining businesses, which are enterprise businesses and the broadband business with Tata Communications and Tata Sky, these are group businesses. It's not definite. They said we've pitched this to those two companies and we'll see. Both are listed. So we'll see what they have to say. And finally, it retains the Viom stake in all of this. So it continues to have exposure to the tower business. So that's what Tata Teleservices ends up with. The most interesting picture, at least to me in this, is because it's a fairly good deal for Bharti and for Tata. But I think what it means for the telecom industry, and Neeraj, you and I were talking about this late last evening, that's the most interesting bit here, right? We're down to now 3 strong players. I mean, I know, I'm not suggesting that Arcom has gone away or anything like that, but they're all fairly weakened players. So we're looking at a 3-player industry at this point in time. Now, typically in any such consolidation, competitive intensity reduces. But in this 3-player industry, you've got one aberrant player, right? One distortionary player. There's one guy who's willing to go out there and sustain losses for God knows how many quarters just to be able to gain revenue market share, just to be able to gain customer market share. So you don't really know whether the competitive intensity would go away. So typically, if you told me so much consolidation, we've gone from what? In 10 years, a dozen players, if you counted in all the Videocons of the world and all of that, to 3 players, I'd say that's bad news for the customer, right? Because what happens to pricing intensity? What happens to better customer service? But in this case, maybe prices will not necessarily stabilize if Jio continues to play the distortionary factor. That's one. What happens to the impact on sector finances? Again, consolidation typically would mean healthier financials for every single telecom company involved. But in this case, Jio continues to be the wild card. Yeah. So we don't really know whether it'll mean better sector financials also or not. And finally, this is the only thing we have some degree of confirmation on. What will it mean for government revenues? Because if you're down to just 3 players,
who will bid for the spectrum?
Yeah, the power and leverage in a spectrum auction has moved, entirely moved, right? It's moved from the government being able to play this little, shortage thing with spectrum and give out only little bits, to now a buyer's market for spectrum. You don't want it? Don't bid for it. We already saw in the last auction or so that many players, decided not to at all bid in certain categories because they thought it was too expensive. Yeah. So when you're down to 3 players, what does it mean for spectrum auctions? What does it mean for government revenue? The government's going to have to rethink all of that as well. So to me, the evolving status of the telecom industry is going to be the most interesting thing, in the months and days to come. Bharti will stand again. I know Somit will come back later on in the show to talk about how that stock will possibly have a good day today, given all the brokerage reports. Tata Teleservices, this is the best case scenario. Telecom industry, and that's the question mark. And let's put that question to Sanjay Kapoor. We've got the former India and South Asia chief of Bharti joining us on the phone line. Sanjay, hi. What do you make of the fact that we are now seeing the consolidation that we had always anticipated, except we thought it might be a 5-player market? It seems to be down to a 3-strong player market. Do you see that being, a good thing for financials, etc., and a bad thing for consumers?
Look, I had predicted even a couple of years back that eventually in an oligopoly, when we move from perfect competition, there'll be 3 or 4 players. India may not have room for 5 players given the price of spectrum that prevails in India. It is so dear that you can't have a business case which is viable for 5 guys who buy spectrum at that price. So therefore, the number of players had to be lesser than that. It is now very evident that there are 3 players. We need to understand that the competitive intensity in the market is not led by the marginal players. It is being driven by the bigger players. So it is Jio at one end, and it is an endeavor amongst the incumbents to protect their base and therefore level up to Jio's pricing in the marketplace, which is driving the competitive intensity. The marginal players had lost their, impact on the market a while back. And moreover, all the marginal players are voice players. They're not data players. The real game in the market is all about data. So I think the 20% odd share of these marginal players is there for grabs. Whether you acquire it inorganically or you acquire it organically, all big 3 players would want some piece of that pie to come to their kitty, and they would amass their market share. So I think here Airtel is playing a role by taking a sort of a quasi inorganic step to acquire the customers and therefore market share, both revenue and customer market share of Tata into their kitty. It beefs their kitty for any loss against a Jio in near future or in future. And on the other side, we know that there's an amalgamation happening between Idea and Voda, and therefore they will become the largest players in the market. And therefore the second player needs to reduce his gap compared to the biggest player in the market. This allows also Bharti to do that. So I think for Bharti it's good news. But is it a game changer for anybody? I don't think so. Because at the end of the day, the customers with Tata are essentially voice customers. And voice we know is perceived to be free. They are not data customers. They are not 4G customers. Of course, Airtel will have now the option of converting them into data if they don't have a data SIM already with somebody else. Because these customers are precarious. It's not very clear whether they are pure data customers or they are voice and data customers or they are voice-only customers. So I think that will unfurl as we progress and as Bharti reports its numbers, that is there an accretion because of these customers to Bharti Airtel. From Tata's perspective, I think this is the best salvage for their customers because they would have been lurching in the market because Tata's had to shut down shop. It was making no commercial sense. And Bharti has now bailed out their customers and given the customers a soft landing. So I think it's good for Tata's in every which way. And Bharti is not paying a penny for this. Therefore, it doesn't have any big dent on Bharti's leverage or on its P&L for that matter. It will only be accretive. So I guess it's win-win for the market. It allows the market to comfortably move with yet another player towards oligopoly and consolidation of the market. Will this reduce the competitive intensity? I don't think so. Will it also impact government on its spectrum prices? I don't think so. Because at the end of the day, it's only these 3 players who have the muscle to buy more spectrum. The marginal players had lost their muscle long back.
But the pricing power on spectrum definitely shifts, right? There was a time, I mean, look, let's go back to the days of A. Raja, for those of us who've been around and watching telecom since then. And then let's go back to the couple of crazy spectrum auctions that we had, where people were bidding all kinds of prices. And then the last one, where we saw that they clearly stayed away from some of the more expensive spectrum bands, even though they were high-quality bands. So my point simply to you is this, that does pricing power shift? And maybe that's one very small worry, right? It's a government revenue point of view worry. The bigger question here is, do you think we'll stay a 3-player market, Sanjay? Or do you think that the unviability, let me put it this way, right? One telecom leader I was speaking to said that Jio is running a fundamentally unviable business. Now, I don't know if that's true. We'll know from the numbers when the numbers are out by Reliance Industries. But do you think that that fundamentally unviable business strategy for competition will mean that we might, in fact, not continue to be a 3-player market for very long?
Look, India, given, like I said, the price of spectrum and given the consolidation binge that we are on, for now doesn't seem to be more than three players. The state incumbent will be there, but I guess they should get out of this business sooner than later. Otherwise, the plight will be same as Air India. And therefore, it is in their interest to find an exit option for themselves, whether by, selling out their assets or selling out the business in totality. The government needs to take a call, but I don't think they have a place in this market. to be competitive amongst these three large players. So I think these three large players are here to stay. Will there be a fourth player or some more competition? I don't know. The form factor of that competition could
Actually,
change.
Sanjay, the question I'm asking you is, will it be two players at any point in time?
No, it doesn't look like. Doesn't look like. The three are pretty big, and they are fairly well capitalized. So I don't see them go out in a hurry. I don't know what Vodafone's stance eventually is. Is Vodafone exiting the country or we are still speculating? Because if it's only Idea on its own strength to combat, then a question mark will arise at some point in time. But if Voda remains and Idea remains as a joint venture, which it will for the next 3-4 years, I don't think we are going to come down from 3 to 2 in a hurry.
So one final question then, a brief one at that. So if we're now finally at 3, can we hope and pray that the financials of this sector that have been in a downward spiral for the last 2 years at least, if not 3 or 4, will stabilize from here on?
Look, there is a fundamental flaw in the way the business model of all incumbent operators has been pursuing in this market. The fact is that the longevity of technologies has shrunk. What was good for 10 years is now good for 4 or 5 years, and you have to reinvest into newer technologies every 4 or 5 years. The second fact of life is that voice and SMS have lost their traction, and the world over, they are shrinking revenues. When it comes to access revenues on data, they are by and large stable after a threshold penetration has been crossed in every part of the market. The only growing revenues and futuristic revenues for most telcos across the globe are the one that are coming from digital services. Now, once the digital services begin to happen, maybe some incremental revenues for future for a long period in time will probably come to surface. But the fact is that the prices at which we sell our access in this country, to me, is absolutely unsustainable. At these prices, you can't make money, especially when the cost of your raw material is so dear that it is by and large leaps and bounds higher than any other part of the world. So I think that's a big mismatch. Unless and until that gets corrected, it's not going away. The second fact is that Reliance is not here for an 8%, 10% market share. So I don't see them relenting till they get to their aspirational number. And they will keep pursuing and keep putting the whole industry under pressure till they attain what they are there to attain. So I guess we are not seeing this intensity dying down in a hurry until the business model fundamentally changes to match up the cost of the inputs. I don't think this industry is there to make money in the short run.
Sanjay, thanks very much. You've left us with two conflicting forces at play in the telecom industry, the deep discounting by Reliance Jio and the need to move prices higher up for financials to be sustainable. It'll be, like we said, an interesting time for the telecom industry.
All right, those are all the big stories here, but let's give you a sense of what's coming up later in the show as well. We'll talk markets with Pramod Gabi of Ambit Capital, the impact of global aluminium rally with TK Chand of Nalco, business outlook with Suresh Venkatari of 8K Miles, and we also talk to the new kid on the block, Dixon Technologies. Atul Lal will join us later on the show.
Well, full tilt towards the day's trade though. Abhijit Pathak, Director at Definet Solutions, is with us to talk about the derivative space very, very quickly. Abhijit, good morning. Thanks for joining in. We were talking telecom a while back. Bharti will start off on a good note. Anything between Bharti, I'll classify Reliance as a telco as well, that you would initiate trades on today?
On the chart, I think Bharati Futures has a resistance at 410, and if it crosses 410 decisively, then it is a good long. Even Reliance is looking very good on chart, and if it closes above 875 today, even before the results, even that is good to hold. Both are looking bullish actually.
Okay. What's the view on the index though? Will we make a dash? I mean, what are the levels that we need to sustain in order to make a dash towards the all-time highs?
Nifty future should not go below 10,050, 10,060 anytime now, and if that holds, then we can see a new high maybe in this series.
Okay. And Abhijit, what's your strategy for the day? I think you have a call on State Bank of India.
Yeah, State Bank has been consolidating between 249 and 255 for quite a long time, and it is showing a very good support base around 250. So it might be a good bet to go long on it with a very tight stop loss of a couple of rupees. and maybe beyond 255 it can go above 260 also.
Okay, so you expect a target of about 260 odd for the day. Abhijit Pathak, great. Thanks so much for waiting by patiently while we were doing that telecom discussion, but much appreciated joining us and giving us your thoughts. Well, the view is not bearish at all amongst traders either. 3 or 4 large cap names could start off well. So that's the equity side of it. Just a quick dipstick into what the commodity side is showing this morning as well. Pradeep, good morning. And what should one watch out for in the commodity pack?
Well, to begin with crude, there are 2 important developments. One, the U.S. inventories dropped by 2.7 million barrels a day, and also production slipped by 81,000 barrels per day. So both of them have kind of helped the crude edge up. So crude is trading higher this morning. That's a strong cue for Indian oil upstream companies at least. And if you look at this fall in production is interesting because it's the first fall since the August last week. So that is interesting to watch out for, going ahead how it really moves. But dollar index gives you a more important cue for rupee as well as for markets in general, because dollar is falling and is in fact quoting at October lows at 93 if you look at dollar index. And as a result, spot gold has moved up. So that's positive for gold, gems and jewelry companies. It is up, in fact, 5 days in a row. And that's the longest winning streak since May. And at the end, to talk about base metals, well, they are in general quoting higher. Base metal, in fact, edged higher, led by nickel on LME, and also on Shanghai. If you see copper, zinc, aluminium, most of them are up by around 1%. So net, I think it's a positive indication for gold, for crude, and also for base metal.
There's a bunch of things to watch out for. Let's talk about all of that with our experts. Bring up the Asian markets, bring up the SGX Nifty for the benefit of our viewers who are tuning in right now and want to know what the cues could be for the day today. Flattish moves across the Asian bourses. The SGX Nifty 2 is indicating that we'll start off on a flattish note. Let's see if we build on strength from there. Heavyweights are participating, as we've been saying. To talk about all that and more, T.S. Harihar Johnson with his thoughts. Hari, good morning. Thanks for joining in. Reliance, HDFC, all participating. Bharti Airtel might have a good day as well. No. Do you think there's a realistic chance we make a dash towards all-time highs over the course of the next 2 or 3 sessions?
I think we should, and especially I had a estimate that we should get to over 10,300 by Diwali. I'm not sure if it's feasible, but I think give and take a few points, we should be very close to the new high by Muhurat trading day, hopefully. I think what could drive, in my view, Reliance, of course, it's already at 872, which is an all-time high for the stock. I think that stock could probably make a dash for 920, 930. And I think that could be a very key indicator. And I think, with the kind of results we have seen for IndusInd Bank yesterday, with a 25% growth sustaining for a large number of quarters, a lot of private banks, which are heavyweights like HDFC Bank, Yes Bank, to an extent ICICI, I think they could all make a dash before Diwali. So I think these stocks put together, my hunch is around the Muhurat trading day, we could get to over 10,300.
Reliance Industries, Hari, I mean, the results today, a key determinant, but it's rallied 12% in this month already from the lows that it hit at the start of the month. 12% already. Can it do more?
I think it could do a lot more. I normally give this analogy, that Reliance Industries has sunk in about 2.5 lakh crores into telecom, and the market cap has gone up by about 2,70,000 crores in the last 1 year. So effectively, the company has recouped all its investments into Reliance Telecom. But that's just on the lighter side of it. But I think the way they are kind of disrupting the telecom industry, and now it's not about oil, it's not about petchem. I think those are mature businesses, not much to talk about. But I think Jio could be a very big story. And I think my view is that Bharti ke liye this particular deal with Tata could actually be negative, because Bharti has a profit of over 3,500 crores, Tata Tele has 4,500 crores of losses. So if you add them up, they're actually making a net loss. So I think I am slightly worried about the Tata, this Bharti deal, but I think Reliance should be the one big beneficiary on the telecom space.
But they are taking over a very small part of debt actually, so financial cost won't be that high. So, yeah, definitely there will be some adjustments. But what is the net impact on your outlook for telecom sector? I mean, with one player going out, maybe one more will exit soon. Does that help Bharti and Idea, the two listed players, in any way?
I'm not too sure. See, because I think the economics of the structural economics of telecom is not too favorable. Either the input costs are too high or the tariffs are too low. I think they're in a kind of a tough situation where it's going to be very hard to maintain margins. So unless there is a structural change, I would believe that telecom is going to have a tough time.
But I must say, Pradeep, brokerages across the board today have said that Bharti could add anywhere between 35 rupees to 80 rupees per value per share. So maybe the medium term this scenario could unfold. But today's session, if brokerages are to be believed, we might have a bit of a pop in the stock today. Let's wait and watch.
That's one stock to watch out for, but there are more. And our research team is standing by with all the details on important research reports, key developments, news items. And to begin with, Shraddha, Piramal Enterprises, in fact, was our exclusive. So it's confirmed now?
Absolutely. We had an exclusive saying that they're looking to raise funds via the QIP. In totality, they're looking to raise about 7,000 crores in a combination of QIP and rights issue. The QIP issue of 5,000 crores opened yesterday with a floor price of 2,688 rupees. That's a close to 2% discount to yesterday's closing price. And they'll be raising another 2,000 crores via rights issues, wherein the promoters are said to be subscribing to the rights issue as well. You have Shriram EPC, where they have won multiple orders worth 349 crores in Bihar and Karnataka. Now, the FY18 revenues for this company was about 436 crores. So these order wins could probably provide some sort of a visibility on the revenue front. So we may see some positive reaction there. ABG Shipyard will be in focus on the back of an ET report, which said that Mahindra & Mahindra, Shapoorji and UK's Liberty House are vying to acquire the debt-laden company. Now, all these three are set to have separately bid for assets for about 3 to 3,500 crores. It would be interesting to keep an eye out on that name. And lastly, on the back of Baltis, we're tracking Atul Auto, where Goldman Sachs has sold 1.3% stake yesterday. Unit sales for the month of September for this company had grown just about 2.5 to 3%. So it'll be interesting to watch how Atul Auto does today.
Well, Raghav, we have been analyzing TCS results since last evening. So what is the considered view from top brokerages?
Well, 4 foreign brokerages all maintain their ratings, but all also increase their price targets.
That's great.
We're going to start off with CLSA. Maintains a buy, hike to price target to around 29.70, and it's been a mixed quarter, but they are expecting an improvement going forward. Macquarie maintains a neutral with a price target hike to around 2,375, and they are also of the opinion that the FY 18-19 estimates may see a slight increase. Credit Suisse on TCS maintains a neutral with a price target once again hike to around 2,350, and they see impressive growth in digital, and this growth demonstrates TCS that has been able to handle the transition to the digital era. And finally, Morgan Stanley on TCS. They maintain their underweight, but once again, they have also hiked the price target to 2,250. And well, for them, results were largely a miss. But given that we've seen a beat in margins, that's considered a positive, and that's the reason why we have seen an upward revision of the target price.
So that's a good news. Given 2% gains we already recorded yesterday, Nikki, you are reading an interesting report on Sanjay Industries. 18% upside.
Yeah, so it's an upside of nearly 28% now. Anand Rathi has initiated a report with a buy rating on this counter. It says one of the lowest cost producers that the cement industries could have. 2 reasons for it. Its proximity, to the raw material, which is ash and fly, and also the use of lignite and the overall power and fuel cost. Now, remember, lignite is almost 15%, trades at a 50% discount to that of coal prices. Also, strong pricing demand in West works well in the company, works well in the favor of the company. The company is also looking to expand its capacity, almost doubling now from 4 million ton now, which to 8 million ton going forward in FY 19-20, which also at this point of time, it says that the report also points out that low capital cost for expanding capacity and freight cost, yes, is the highest among the industry, but then it's taking due measures to control that kind of cost. It says that it's going to be commissioning 2 ships in Mumbai, which will in effect bring down the saving, which will get a saving of around 50 to 70 per ton in the freight cost. Utilization is expected to increase in the next 2 years. It is expected to improve to 82% versus 70% now at this point of time. It expects the value. It expects the volume CAGR to grow at a rate of around 8% in the span of next 3 years. Revenue is also expected to grow at a CAGR of nearly 18% in the next 3 years. So yes, an interesting note coming on that.
So various interesting stocks really to watch out for. Thanks a lot for all these details. And Hari, do you have a view on Piramal Enterprises, companies planning to raise funds? And in fact, we broke this story earlier this week. What's your take on this?
See, I think Piramal has always been an interesting stock. Valuations, it has always been a little rich. But let's understand, Piramal is more of a holding company. It's now, kind of expanding its interests across so many sectors: real estate, REITs. It already has a stake in pharma. I think it's more like a holding company. And yes, as long as these holdings continue to be valuable as they are, I would believe that Piramal will continue to be an interesting play in the market.
Okay. 8:45, actually a couple of minutes over that. Let's get in our technical experts on board to try and figure out what should be the trading strategies for our day trading friends who join in as viewers, and Jay Thakkar as well as Gaurav Bissa with their thoughts. Good morning, gentlemen. Gaurav, let's start off with you. Is there a trade on the index that you have?
Good morning. For index, one can play with the Bank Nifty, that is still to make long leap towards a new high. Bank Nifty is 780 points away from Nifty 780 points away from the life high, but Bank Nifty is still 400 points away from the bank lifetime high. 24,500 is a very crucial level. It has been acting as a strong resistance. If you look at the option chain, it has the highest concentration. So buy Bank Nifty about 24,450 spot levels. Have a stop loss of 24,250 on the upside. Targets can be around 24,850 to 24,900, and that can be seen next 3 to 4 days if it sustains 24,450.
Okay.
Jay, you have a call on the Nifty as well. I think the target is 10,220. You would buy it at open?
Absolutely. In fact, we have been recommending the same to our clients, Neeraj, and the day since it has made that positive close right at the previous lows of around 96.85, we have been recommending longs. The reason for that is, Neeraj, that clearly we think that as per the theory, Nifty seems to have completed an running flat pattern, and whenever this kind of flat pattern gets completed, the main or the target, the conservative target, comes above the previous high, and the previous high was somewhere around 10,180 approximately, right? So it has to, or it needs to surpass those levels in order to qualify that the previous pattern is completed and the next move has also begun. So I think that 10,180 is the immediate target. Why 10,220? The reason is, if you just connect the two dots, or connect the two highs of around 10,140 and thereafter 10,180, you straight away get that trendline resistance of 10,220. Hence, that's our target going forward, 10,180 and 220. On the lower side, we have been seeing now that the Nifty is forming higher tops and higher bottom with a clear buy crossover in its momentum indicators. Hence, on the lower side, now we believe that 9980 would act as a very crucial support.
Okay. Gaurav, you also have two interesting stock ideas. I believe both are on the buy side.
Well, yes, the first one is on MFSL, Max Financial Services Limited. We have seen that it has been consolidating, finding good supports at 580 zone, and that has been the case for last 3 to 4 months. And we are seeing some sort of long way addition happening in the name. It has not yet moved as per the expectations, but since it is at the near the strong support zone, and also the Nifty and the Bank Nifty are at the higher end of the zone, so we need to have something that is defensive sort of as well, and it has not yet participated. So even if Nifty consolidates a bit, it can outperform the market. So on that premise, one can have a stop loss of 578, buy MFSL for targets of 640. Second, when we buy on National Aluminium, we have seen consistent long pushes getting built. Yesterday, 12-13% OI addition was seen in the name. 85 call option had the highest concentration for 2 or 3 months, and it has now closed well above that particular level, given a breakout as well. So with the stop loss of 83, one can buy a National Aluminium for targets of 92 to 93.
Okay. And Jay, you are bullish on banking sector. Actually, you are buying two financials.
Absolutely, Pradeep. In fact, this sector has seen, a good amount of consolidation now, and I think that, if Nifty is likely to make a new high, then, banks are too likely to follow. Maybe not the PSU banks, but the private banks have been doing good, so they would continue to do so. And then amongst them, I have HDFC Bank, which I think seems to have completed a good sideways consolidation, a fall in a downward sloping channel on the hourly charts. And in yesterday's trading session, we have seen the breakout coming actually on the upside. So I think, and we have also seen a good long build-up happening out there as well now. So I think, HDFC Bank is quite likely to inch towards the levels of 1846 on the upside for the short term. I believe at least till the next week or before the next week concludes, I think, these targets should be achieved. On the lower side, I believe that 1795 is a very crucial support now. So with that as a stop loss, I recommend a buy here. Second buy recommendation is on Shriram Transport Finance. Now this stock, the move prior to this recent highs was clearly an impulse move. The stock has taken off its previous high, which is like, both on the weekly and the monthly charts, I would say. And taking off these monthly highs really indicates that the probability of a next move on the upside is quite high. In fact, the targets are quite aggressive. But however, for the trading point of view, I think, on the upside, we can see the levels of around, say, 1165. On the lower side, 1080 is a very crucial support. So with that as a stop loss, I would recommend a buy here.
Okay, so those are some interesting ideas from our experts, and we'll revisit some of those a bit later on in the show. But time for Bloomberg Edge, our special segment on the show where Jayesh Khilnani brings out what the Bloomberg terminal is throwing as an indicator. Jayesh, over to you.
Morning, Neeraj. So the stock that we are looking at today is Dr. Reddy's, and the indicator that we are following is the moving average convergence divergence, which has turned negative, thereby indicating a sell signal as of yesterday's close. Let's have a look at how the MACD works. Now, it's a momentum indicator, and it plots two lines, which is the MACD line and the signal line. A crossover between the two lines actually gives you the buy and the sell signal depending on the direction of the crossover. So when the MACD line crosses above the signal line, that's where you go out and buy, and sell when the MACD line crosses the signal line from below. So let's look at the chart that we have on Dr. Reddy's. So that's what I'm talking about, the yellow circle that's highlighted. But what's interesting is have a look at sometime in July when the MACD turned negative on Dr. Reddy's. The stock saw a massive fall from about 2,800 odd levels to about as low as 2,000 levels. So that's a very big move coming in, and that is the last time MACD gave you a buy signal. And the same scenario can be observed as of yesterday's close. So, a sell signal coming in for Dr. Reddy's.
Okay, Jayesh, means a sell signal really. The last one was a big sell signal where the stock corrected. Jayesh, just very quickly, you already told us about the effectiveness. Any number of times that people have entered into this trade and made money, any data like that?
So the total trades that were generated on the MACD in the last 1 year stood at about 11, and the potential return that one would have achieved would have been close to 40%.
That's interesting. Thanks a lot for that, Jayesh. It's just difficult to recognize a bear call on pharma right now, considering the kind of mood that the index seems to be in hurry. There might be a tactical call here, but what would you do? I mean, if you, let's say, you are brave enough to invest into pharma at the lower levels, which very few people were, would you be taking some chips off the table, or would you be staying the course?
See, if you look at pharma in the last couple of months, I think stocks like even Sun Pharma, Lupin, I think they've given anywhere between, 15-20% returns, which I think is, in my view, decent returns considering that the industry overall is in a state of flux. And I don't think much has changed between 2 months back and today. It continues to be as uncertain as it was. We don't know what Trump is going to do to Obamacare. We don't know what is going to happen in terms of the competition among generics. And I think all these problems remain. So I think if you have been lucky enough or smart enough to enter at the lows, I think this is a good level to take money off the table.
So charts actually tell you that probably some smart investors are already doing it. So there is some money already moving out. But if we talk about, smaller stocks, Sanjay Industries that was discussed, there is an interesting call from Anand Rathi. Are you tracking it fundamentally? Any views?
See, we have looked at Sanjay, and I was looking at the argument about access to lignite, but see, I have a small worry here. There has been a major environmental concern over use of lignite, and that is one of the reasons why lignite has not really taken off as an alternate to coal. So while it's right that costs are lower, the environmental concerns normally tends to kind of gloss over the cost factor, and that's one of the reasons we've had this problem with Neyveli lignite in the south. Lignite mines tend to have a major impact on the water tables, on the overall environment. So they have not been very preferred either in India or across the world. So I'm not sure how much that could translate into a benefit as far as Sanjay Industries is concerned.
I believe GMDC has already got a huge mine of lignite in that area, and they have been producing for a while. So
yeah.
Doesn't look like there is any concern, at least in that region.
No, and I think to Sanjay's benefit, what works is the long duration limestone access that they have. I think we've seen companies like, if I'm not wrong, Digvijay Cement suffer big time because of not having limestone. It showed in the numbers yesterday, if I'm not wrong, for one of the cement companies. I don't know if it was Digvijay or somebody else, but one of the cement companies that came out with the numbers, it was clearly showing that their inability to get limestone at key levels impacted them in a big way. Sanjay is very well protected on that front. It was a highly leveraged company. They've deleveraged it very, very well. And which is why if you look at Sanjay, the last 2 years, it's moved up from almost 40-45 odd to 124. So that's almost a 3x or 1.5x jump that Sanghi Industries has shown. It's an interesting player, but I mean, you could argue that there are probably others in the cement pack who are doing as good as well. So maybe Hari's point is well taken. Maybe look at other cement companies, don't need to look at Sanghi. Anything else that you like in cement, Hari?
See, we are kind of neutral in the cement space overall, and I've always believed that over the last 3-4 years, while there has been a bounce in stocks like ACC and Ambuja from lower levels, the pricing power is still not back with the cement companies, and that is normally the time cement companies make money for investors. So you probably get a 20% bounce, a 30% bounce, but that is like buying Sun Pharma at 490. You will get a 20% returns for sure. But whether it's a good investment from a long-term perspective, I think I have my doubts on cement on that front.
Okay. We have about a minute left. Gaurav, maybe stick to cement. Anything in the cement pack? 30-second answer.
Well, only India Cement, that is one name that looks good. It has a strong support at 175. So using that as a stop loss, one can play for immediate levels of 184, 185. 188, 190 is a very strong resistance. When that is crossed, one can play for 200. But for the time being, India Cement looks decent for an up move.
Okay. 30 seconds left for the pre-open session. Pradeep, so much to focus on. Reliance Industries, whether the up move continues. TCS, whether it reacts. My personal doubts, quite frankly. Constant currency, not the best, even though the EBIT numbers are strong.
And maybe it's closer to, its upper end of the recent swings that we have seen. So we'll have to take a technical view once markets open, maybe. But also, all the telecom stock, not only Bharti and TTML, but also Tata Communications.
Yeah, and then you never know. This might have a reaction on the telcos space by and large. Reliance has anyways been on a bit of an upsurge. So lots of stocks to watch out for. These are the pre-open rates that are coming in. About 0.5% for the Nifty. We probably won't have these rates. We'll start off maybe on a flattish note. The question is, I think, whether private banks participate, whether the capital goods space participates after the IP numbers that have come out yesterday, whether Reliance participates. If these three tend to make a move, and Bharti being Bharti, you would know, even though it's just 1.5% weightage, will probably make a bit of a dash. You might be in for a good day in trade today as well. Reliance starting off marginally higher. Bharti Airtel, may not be a 10% move, but we'll have a start in the green for sure for Bharti Airtel. So watch out for this one. Pradeep was right. Watch out for the Tata Group, telcos, stocks as well. They could well be in for some action. So Tata Communication, TTML, for example, that penny stock, but could be interesting. I think we could have some moves here and there into all of these two. TCS is something that we should watch out for very, very strongly. Let's see if there is a reaction thereof. No, I'm not surprised. I would really be surprised if TCS shows a 3.5% reaction, because the constant currency growth was down, even though the commentary was good. You don't know if 17.5, 18 times, there might be big buyers for TCS. But you never know. There could be surprises as well. Let's wait and watch. I'll be surprised if TCS shows a big bang move in today's session. Infi, HCL Tech, okay. And then a clutch of mid-caps in focus as well.
And RIIL, this smaller stock, actually Reliance Industrial Infrastructure, it came out with the results. Didn't look impressive, but stock, anyway, this opened flat to positive. And also Piramal Enterprises, the stock we are watching out for. After our exclusive news got confirmed, the firm is going to raise funds in the process of a rights issue, actually. Also, look at Shriram EPC. The company has won 350 crore worth of orders. It's a bunch of orders, actually, several orders. Well, it's up 20%. That's shocking. DHFL is also in news, and also Indiabulls Housing Finance, because its UK subsidiary has got fund infusion. So how does Indiabulls Housing Finance react today? Also ABG Shipyard, a smaller stock. We don't really track very often, but newspaper reports suggest that M&M, Shapoorji, Liberty House, a number of suitors are probably lining up, but no major gains. That's interesting. Only 1.2%.
Yeah, well, the currency just very, very quickly, 64.96 for that one. So not a big reaction, but 64.96, about 14 odd points higher for the
so it breached 65. That's interesting.
That's interesting.
And the way dollar index is actually dipping, it's closer to 93. If it moves further down, there could be more gains for rupee. But smart recovery. The lows we saw around 65.90 odd levels. So we have recovered almost a rupee from the recent lows, and that strong currency actually helps markets. So good news.
Yep. Watch out for the rupee during the course, actually strengthening for the 64.91. But let's shift focus to the other big brokerage verdicts for the day. by and large, brokerages have upgraded Bharti Airtel post the deal with Tata Telecom. It remains the biggest stock of the morning. Sumit Sarkar is here with all that you need to know with regards to the brokerage reaction on Bharti Airtel.
So most of the brokerages have hiked the target price and also the rating on Bharti Airtel. Now Credit Suisse has upgraded the stock to neutral and have hiked the target price to 400 from 320. Now Credit Suisse is saying that this deal with Tata will add significant cost and network synergies to Bharti Airtel, and this deal adds around addition of around 80 rupees per share to Bharti Airtel. Now Kotak Securities is saying that this deal with Tata is obviously positive for Bharti, and Bharti will likely surrender the administered spectrum, which is around 107.25 megahertz, and Bharti will take in a debt of only 3,000 crore. That is a spectrum liability debt. Now, third we have is HSBC on Bharti Airtel. Now, they have also upgraded the stock to buy from hold and have hiked the target price to 490 from 421. Now, there's also hiked the medium-term EBITDA by 7% to factor in the benefits that will come in from this Tata Bharti deal. And they're also saying now that Bharti will make it difficult for Jio to continue with the disruptive pricing, because they are not only getting the customer base but also the spectrum in the book.
Okay, thanks a lot for that, Sumit. Sumit, if I can just ask you one more follow-up. What's the least that any of the brokerages have said this deal adds to Bharti per share value, and what's the maximum that any of the brokerages have said?
So Morgan Stanley note said that this deal will add around 35 rupees per share value, but they haven't hiked the target price of Bharti Airtel. And then there was Credit Suisse, which is saying that this deal adds around 80 rupees per share value to Bharti Airtel.
Okay, so thanks a lot for that, Sumit. So here's the deal, Pradeep. I mean, if you believe what brokerages are saying, and I take on board Hari's point, maybe for the medium term you don't know what will happen, but for the short term, if you just look at what the brokerages are saying, Morgan Stanley, which is the least bullish on the back of this deal, is saying it'll add 35 rupees per share, or 17 if they take in some spectrum liability, but 35. Let's go with that base assumption. And I think Credit Suisse said 80 rupees per share. So
that's huge.
Yeah. So you would probably presume that the sell side, by and large, believes that there could be anywhere between 35 to 80 rupees addition, not immediately over the course of the next 6 to 9 to 12 odd months by the time the deal is consummated. You'd suffice to say that there could be some positive reaction in today's session, which is what
I think we already had an interesting discussion with Sanjay Kapoor that was in the morning, and he was also putting forward two conflicting points. A, that you have a strong competitor, a new entrant like Reliance, who is trying to push the prices down and gain more market share, but also the need that probably everyone cannot keep losing money for long. So eventually, if the number of players comes down, probably all these brokerages believe that the sector should gain, the profitability should improve, and there may not be that much pricing pressure. So I think people are working with all those premises.
But the interesting thing, and Hari and Pradeep, either of you can come in, and then we'll get to Jayesh as well for the next piece. But he mentioned that the average revenue per user for a Tata Tele customer is about 162. Now, you don't know whether it's voice or data or what, but if it's 162, that's at the higher end of ARPUs that companies, telcos, by and large, seem to be enjoying these days. You get 4 crore such customers with an ARPU of 162. That's not a bad deal to get for not paying anything and not assuming the entire liability of the spectrum.
No, it's not. See, at the end of the day, we'll have to see how much actually translates into an increase, because I think Bharti's ARPU is also somewhere around that range. I don't think it's too far off. So, in terms of ARPU advantage, I don't think it's going to be very great. But,
as it's no disadvantage, Hari.
No disadvantage. You're right. I agree with you. There's absolutely no disadvantage. And in my view, I think it is neutral for both. I think as far as Chandra is concerned, he gets rid of one of his, problem pieces. And as far as Bharti is concerned, well, they are getting 15% more customers. If you look at the number of customers, it's roughly about 15%. So to that extent, yes. But as I said, it's going to be at best neutral. At best neutral. So that's...
Well, let's wait and watch for now. The street showing a bit of a thumbs up. Let's wait at 9:08 and figure out what happens. But until then, from brokerages and the view on Bharti Airtel to a fund house, HDFC Mutual Fund has been busy last 1 month rejigging the portfolio. Jayesh has put together a list of the top buys and sells done by HDFC MF. Jayesh, stocks seem to have featured on both the lists.
Yes, Neeraj. So let me start off with that the total equity assets under management for HDFC Mutual Fund now stand at in excess of $17 billion. Now, if you look at the sector-wise exposure that they have, so it's highly skewed towards the financials, which stands at about 30% of their portfolio. The second sector, the second highest weightage that they have is in industrials, which is at half of what they have in financials, just at 15%. In terms of the mix between the large cap and the mid cap stocks that they have, exposure towards large cap stands at 55% and mid cap stands at nearly 20%. So what are the stocks that they actually increased and decreased stake in the month of September? Let's have a look at that. So TI Financials, which is the erstwhile Tube Investments, they added about 77 lakh shares over there. Axis Bank, Infosys and HDFC. So the banking names featuring over here, giving proof that they are highly skewed towards the financial segment. Now, in terms of the decreased stake in the month of September, the highest cut was seen in Vedanta, in which they sold about 47 odd lakh shares, followed by Adani Ports, Tata Steel, M&M and Maruti. So two clear trends, Neeraj, that I'm picking up over here is one is from the auto segment that they have decreased stake, and the other one is the metal space, Vedanta and Tata Steel, slight decrease in their holding. In terms of the stocks they recently bought as a fresh position and sold as a fresh position, if you have a look at some of them. So Vijaya Bank, they bought 50 lakh shares. They subscribed into matrimony.com. The IPO opened in the month of September. They bought about 20 lakh shares over here, followed by KEI Industries and Dixon Technologies. In terms of the new sales that they did in the month of September, a very mixed picture coming in over here, no clear trend emerging. Navbharat Ventures goes out of their portfolio, so does MT Educare, GTPL, Hathway, IFGL Refractories. The interesting bit comes in over here, wherein they sold off all of their IGL, that is Indraprasth Gas, but that was only at 40,000 odd shares. So, these are the key changes that HDFC Mutual Fund did in the month of September.
Okay, thanks, Tesh, for all these details. What was really interesting, auto is a sector that they have exited in a big way because, in terms of number of shares, it looks small, but look at the price differential. Vedanta price per share and Maruti price per share. It's actually, the weightage that they have shaved is more on auto. That is surprising. Metal, I can understand, cyclical. Selling auto and buying banks, is that a great strategy?
No, I would think it's a smart move, because if you look at a Maruti, I think it is kind of appreciated from nowhere to about 8,000 or closer to 8,000. So I think, it's logical to take some money off the table. They also understand that, at some point Maruti is going to saturate. We saw that 5 years back when Maruti saturated for a very long time. And over the last, I think, 3 years, Maruti has literally been on a run. So I think it's wise to take some money off the table. And I would believe that from here on, Maruti should become more of a kind of a trending stock, giving about 10 to 15% annually. So I think it makes sense. HDFC Bank had become very cheap. Axis Bank today, I think, has come down substantially. So I think most of the investments they have made appear to be stocks that are grossly underpriced. So I think it's in my view, it's a smart move that they've done.
So we thought banks were expensive, but they're adding banks.
Yeah, they're adding banks, and one of the stocks, we'll talk to them as but a bit later on, Dixon Technology is something that they've added. However, 9:08 happened, the pre-open rates have settled. Very quickly get you what the indices are likely to do in the session today. We'll probably start off on a marginal uptick, so 10, 1, 2, 3. Watch out for Bharti Airtel, I presume. That one is the big one to watch out for. But minutes away from market open, let's tell you all that you need to know to stay ahead in the session today. The top 6 newsmakers for the session today. Okay, the first one, brokerages raise price targets on TCS, the India's largest software company, reported results which were in line with Bloomberg estimates.
And also you have stock of the day, which may be Bharti Airtel. The telecom major acquired Tata's entire mobile operations, including Spectrum, in a no-cash, no-debt deal, and HSBC, Credit Suisse, Kotak, they have all upgraded the stock.
India's largest company by market cap, Reliance Industries, all set to report earnings today. Bloomberg Quint estimates sees profits surge 6% over last quarter. Geo Financials will be keenly watched.
And Bhansali Engineering, JNAXL, Karnataka Bank, Kirloskar Oil, MCX, Reliance are some of the other companies that will report earnings today.
TCI Express is meeting a series of investors, including likes of Motilal Oswal, AMC, IDFC Mutual Fund, Goldman and Morgan Stanley today. Recently listed company Capacite Infra is also meeting several funds.
Other stocks to watch out for, Shriram EPC that wins multiple orders for 350 crores. M&M, Shapurji, Liberty House, all these are vying for ABG Shipyard stake, and as per a newspaper report. So that's another stock to watch out for. DHFL's loan to Manpreet Estates under tax scan as per Business Standard report. So there could be some negatives here.
Well, Shriram EPC could be that big winner in the mid-cap space or the small-cap space, frankly, guys. 15% higher after bagging those orders. So do watch out. We're talking about Bharti Airtel, and naturally we should. Maybe even a Reliance, but Shriram EPC could be the big one in the session today. Bharti is up 7.5%. Reliance marginally higher in trade, and private banks and capital good companies could be very, very interesting because of the IIP numbers. But about a minute and a half left before the markets start trading. Let's get in the top trading ideas from our experts. Jay, one top call for this morning.
Well, I think, Motherson Sumi, the way the stock is trading well above its previous highs, and it's been continuously forming high tops and high bottom with a very clear buy crossover in its momentum indicators. The stock is also trading well above its short-term moving averages. I think Motherson is quite likely to inch towards the levels of 373 in the near term. On the lower side, 349 is a very crucial support. Hence, with that as a stop loss, Motherson becomes a buy.
Okay, so that's a call coming here. And look at some more stocks that look interesting here. Gaurav, anything that you have spotted in morning trade?
Well, MCX looks extremely well. If it sustains 1130, these are the levels from where we saw unwinding happening on multiple occasions. If it sustains 1130, I would not be surprised 12 net coming in a day or two. So with a stop loss of 1110, 1115, 20 rupees stop loss, one can buy MCX for a 70 rupee target.
After a while, I'm seeing MCX coming as a top call. So two ideas, multi-commodity exchange from Gaurav Bissa and Motherson Sumi from Jay Thakkar. Those are the top two technical calls that you need to watch out for in the session today. 19 seconds left for the markets to start. You will watch out for Bharti Airtel. The stock has shown its hand. Will start off 6.5%, 7% higher, so not bad going there. We will also watch out for what happens to Reliance Industries. Watch out for some of the big winners for the last few sessions, the likes of Adani Transmission, Sterlite Tech, and Shriram EPC from the mid-cap space could be interesting. But here are the first rates. 10,122, about 0.25% higher. The Sensex about 100 points, and the Nifty Bank about 0.33%. Not bad going at all. Bring up the heat map. Maybe bring up the mid-caps and the small caps very, very quickly and show you what's happening at the broader end. Yeah, we'll start off about 0.25% or started off 0.25% higher. Bring up the heat map and show you the mood. I would reckon there's a lot of green, very marginal red, not too many losers. But Bharti Twins, Bharti Airtel, Bharti Infratel up, and then a slew of others, the likes of Reliance Industries, etc. follow. But the big one for the day has to be Bharti Airtel, 6.5% higher, big move at the start of the trading day. The weightage is not too much, about 1.5%, but Bharti Airtel is certainly contributing to the index move today. Bharti Infra about 2.5% higher, so that's not doing too badly either. And Reliance Industries has about a marginal gain, about 1%. So good going for these two or three names. The large cap space dominated by what's happening to telcos. I would classify Reliance Industries as a telco as well, but Bharti Airtel clearly right up there. Ahead of results, Reliance Industries about after a 12% move that we've seen already in the stock in the month to date. Reliance Industries is adding another 1% in the session today, so not a bad start for that one. What about some of the others? Earnings reaction on TCS? No, not so much. So actually a flattish start to TCS. Not surprised there. You probably wouldn't have anticipated something else from TCS either. What else? Brokerage is bullish on Sanghi Industries. This one has had a good move, another 2.5% in the session today. So good going for Sanghi Industries. Whether there are more suitors or no, but ABG Shipyard is certainly believing that there are. There are reports which suggest that they are, and the stock is up about 4.5%. And these stocks have been the principal gainers the whole of this week. Adani Transmission, there is Sterlite Technologies, there is HSIL, and they are starting off in the green today. And Pradeep, I wouldn't be surprised if Shriram EPC is amongst the big movers in the session as well today.
15% now, so that's good going. And so far, they have traded 350,000 shares. That's good. Significant volume here. Global Offshore is another one, moving up 13% this morning. You also have Eon Electric, which has moved up 10%. Well, Tata Tele is up 9% now. Well, it is, I think, at 10% circuit, so it can't move up any further. You also have a Shilpi Cable moving up. Well, CNC Construction is another stock to watch out for, a 5% in today's trade. And there are some some more stock like Adhunik Industries. So all in all, mid caps have also opened strong. They have been doing well. Adani Transmission is one stock to watch out for of 3.5%. This has been a consistent gainer. And Himachal Futuristics, over last 2 days, yesterday and today, this stock has again started moving up after they received a big order from BSNL. So it corrected quite a bit, but now moving back up. HFCL, Haresh, do you track HFCL? Any views?
See, we are people who are familiar with the checkered history of HFCL. And if you know HFCL back in the early 2000s.
But BSNL, if you get order from such a big company.
I agree, but somehow there is so much of, I would say, negative history associated with the stock, that we generally kind of avoid giving any buy recommendation on this particular.
Jay, I believe a lot of retail investors, retail traders rather, have been interested in this stock. If somebody has a position, any interesting level to watch out for?
Absolutely, Pradeep. See, well, I believe that, stock recently has shown a good up move, and I think the way it has been forming high tops and high bottom in a clear upward sloping channel. In fact, it broke the channel on the upward side, and then, it is now taking good support at the short-term averages. So I believe that on the lower side, this stock has crucial support levels around 19. I think that's quite far from recent levels, but I think the kind of move which we had seen, those are the levels. Around 19, I think, is a very good support. Till those levels are not broken on the lower side, I believe the stock has quite a chance that, it moves going forward towards the levels of, in fact, I would say 37 initially, and thereafter 46.
Okay. Hari, take a moment to thank you for joining us today on our show and giving us your thoughts, and have a great weekend, Hari.
Thank you. Thank you
very
much.
That's, of course, the view from TS Hari here. But Gaurav, I wanted to take a view on Bharti Infratel and Bharti Airtel. What should an average trader do now?
For Infratel, it has given a very, very strong breakout after a multi-year downward sloping trend line. So position is also quite aggressive. So any dips towards 430 can be bought. The reason is that the breakouts are seen near 415, 420 zone. So you don't have too much of a risk reward ratio at 440, 442. But certainly a good buy near 430 with a stop loss of 420 on the upside. Targets came around 465, 470. Bharti Airtel, I would still give it some time. It's cooled off from the high levels. I would wait. But Infratel, it's already broken a good resistance, so one can buy on dips.
Gaurav, any views on banking? You are bullish on Nifty Bank. It has opened up with a gap, sustaining it, building up on that actually. Any particular stock that you think will take the Nifty Bank up where one could take a long position today?
Well, for last few weeks, it has been majorly HDFC Bank that has been giving a strong push. So there are certain banks that are looking good, but I would not say they will give a push to the Bank Nifty. But yes, Axis Bank is one that one should not avoid. If it sustains 525, it's quoting around 523. If it holds on to 525, then I expect a 10% up move coming in next 2 or 3 weeks. And that would be the best performing private sector prominent F&O name among the banking space. So there is one name that should be on the radar. Whether it will give a push to Bank Nifty, I don't think so, but it can give a good push to the M2M at least.
Okay. Jay Thakkar, Gaurav Bisa, gentlemen, thanks so much for joining us today and giving us that perspective. Joining us on the show is our big voice for the morning, Pramod Gubbi, Managing Director and Head of Institutional Equities at Ambit Capital. Standard disclosure, he can't talk stocks, he can't give comments on stocks. We'll use stocks as illustrations to ask him questions. Pramod, good morning and thanks so much for taking the time out. Clearly, telecom seems to be the center of stage in terms of activity today. What does this do to the industry? One, with RelJio doing all that it is doing the last few times, and now we having Idea consolidated and Bharti to an extent consolidated.
Right. Yeah, I think you need to take both the events in conjunction. When I say both the events, the consolidation news from yesterday relating to the IUC changes that happened a few weeks ago, right? Yes. So that sort of drove the consolidation even faster. But at the same time, it also made the aggressor, gave the aggressor a bit more aggression in the sense it clearly improved the economics for the aggressor and sort of deteriorated the economics for the incumbent. So to that extent, consolidation is happening, so it should be good from the industry economics perspective, but the aggressor has some more ammunition to create damage in terms of the unitary economics. So it's still early days. We won't say that consolidation will improve economics long term. We need to see how long the aggression persists in terms of pricing and how long it will take or how much will the incumbents have to burn before we can say that things are stable and we can look up to a more steady state economic sort of situation in the industry.
So consolidation is usually good, but do you also believe that no, it will actually, the deterioration in the fundamentals or the profitability will only stop when the new entrant has got a significant market share, because that is what they are looking for?
That's right. At one level, I think on a simplistic basis, that's the assessment which most industries go through, where you have a new aggressive entrant trying to gain market share. But this is a sector which is in the middle of a massive technology transformation, right? So, like they say, data is the new oil. It's the biggest cliche, but it is what it is. People are using data to monetize other services, other products. So for all you know, you might be on queue for making data completely free. So what we are talking about, consolidation and improving tariffs, may not even emerge, right? So, and in fact, on a purchasing power parity adjusted basis, some of the European countries are already cheaper than India in terms of data. So there's no looking forward to a particular tariff level if the going forward narrative is that, look, all I need to do is own the consumer so that I know exactly what the consumer is doing. And using that data, I can monetize my infrastructure, my network in many ways, including selling e-commerce, financial services, whatever it takes, because that data is so powerful. And today, the biggest companies in the world are being valued because of the possession of that data, right? Be it Amazon, Facebook, Google, are all being valued because they have access to that data. So telecom perhaps is one step closer to the consumer than these companies, and I wouldn't be surprised if that's the long-term agenda, in which case tariffs may never recover.
But what is advice to institutional investors? Stay invested in a Bharti or an Idea. Stay invested or get out of these companies?
No, I think if this is the game, unless and until Bharti and Idea change the strategy to say that, look, for me, this pipe or this connection is just a means to the end and not really the end by itself in terms of monetizing through regular data tariffs or ARPOs and all, which might become redundant. So far we haven't heard any of these managements talk about that strategy. Whereas the aggressor is clearly talking about GeoBank, how you have Geo Financial Services coming along with it, you have content being sold on that, you've got e-commerce and stuff. So yeah, I mean, I wouldn't go near telco investment just yet.
Okay. What are you telling top clients to do? What are client conversations looking like out of Singapore, out of the rest of the world? Are people buying into India right now aggressively? I'm guessing the answer is a no.
Yeah.
But if they are looking to buy, what are the pockets that you are advising them to enter into afresh as well?
I think the narrative has changed, or rather the sentiment has changed very sharply. I haven't seen a sharper transformation in sentiment that we've seen in the last 30 days. Any time in the recent past, at least.
For the better or for the worse?
For the worse, in some ways. You can't put a finger on, what that is. Could be, the geopolitical risks starting with North Korea, and then you had a GDP print starting with a 5, which nobody expected, and then you had all the negative news flow around GST implementation and so on. So, whatever it is, clearly, the consensus amongst foreign institutional investors is now that, look, we don't know when the economic recovery is going to happen and how that's going to translate into earnings recovery, because that's crucial for the current valuations to justify itself and for us to make new investments. The locals are slightly different because they are saddled with a lot of inflows. In fact, with every dip, we're seeing the inflows picking up more and more. So that's a different challenge they have to deal with. But even there, I think concerns are emerging. We are getting a bit impatient in terms of earnings growth. At some stage, it will have to come. But having said that, the foreign investors have an option because commodities have begun to rally. They can deploy money elsewhere in other commodity-heavy emerging markets like Brazil, Russia, whereas the locals don't have a choice, in which case they have to pick pockets which can still work in India. It's tough because we've had different sectors, different themes play out at different stages through the last 3 years. And to that extent, pretty much most of the sectors have been valued, or at least factoring in a pretty strong earnings recovery, leaving very little any sort of value left on the table. The only two sectors where we can still argue are IT and pharma, which have been underperforming for the better part of the last 2.5 years. And yet they haven't shown any sort of signs of stabilizing or recovery for that extent. And we've seen the TCS results from yesterday. It's still fairly lackluster in terms of top line, although we can see the benefits of automation creeping into operating efficiencies on the margin side. But that can at best take you to 10-12% earnings growth. Can it move the needle towards the 15% earnings growth is the question. For that, we need to see a demand pickup or the top line pickup coming through for these guys. Having said that, at current valuations, I would say it's not baking in significant earnings growth that any sort of negative news flow can bring the stock down. So you have some sort of downside protection. I guess at these stages of the market, that's one crucial element of an investment strategy, which is protecting your capital rather than looking at increasing your returns. Pharma, on the other hand, I guess it's going to be more case to case because different companies have different sorts of exposure to the US market, which is the biggest challenge in terms of pricing pressures. And based on that, I think one can pull out a few stocks and start getting exposure to that because valuations are still reasonable. Again, relative downside protection, but at the same time, you can drive earnings in the next 2-3 years. So other than these two pockets, I guess very hard to look for value elsewhere.
I would like to bring you back to the macro question. It's a bit surprising for me because you're talking about the smarter players, big players who can look ahead, who talk about 6 months, 12 months down the line. Didn't they realize that with demonetization followed by a GST in a backdrop where fisc is actually consolidating, there will be a slowdown, and probably all this murmur over last 30 days or so is coming at the bottom. And the picture here on might actually look better. Look at the IIP and the CPI data. Look at the PMI numbers that came last week. So things are improving. Why is everybody talking about deterioration now? And will they? If they are right, it means this is just a blip.
Yeah. I mean, look, I think it's demonetization, concluding any sort of conclusive trends from that is hard because this is sort of a one-of-a-type event. There's no history to it, at least no tangible recent history that you could draw. And most people reacted negatively in the middle of demonetization. If you remember, we did take a knock in October, November, December. It's just that the first few data points that came out started positive, and then you had the flows coming in, which also pushed the markets up. In those situations, obviously, you tend to take a relatively sanguine approach. But having said that, if you look at the foreign investor activity, that's been negative all the way from October last year. Barring March, which was perhaps related to the GAR ending, the tax holiday ending. Other than that, maybe February was a slight positive, July was a slight positive. In the secondary market activity, foreigners have been selling for almost 12 months. Most of their entry has been through the primary markets in IPOs and QIPs. But otherwise, in the secondaries, foreigners have been net sellers for now 9 of the 12 months. The locals, like I said, don't have an option. If you're getting the sort of money, partly again related to demonetization. Demonetization accelerated the shift from physical savings to financial savings. First, the money came into bank deposits. Banks cut the deposit rates. It had to move into higher yielding asset classes, which was equities. So between demonetization and GST, these were sort of one-off events. We couldn't have really forecasted what could have happened, but at the same time, there was always hope on the back of these flows that at some stage we'll see a recovery. For all you know, you might end up seeing a recovery through the festive season, because a lot of the impact from GST has been on the supply side. On the demand side, couldn't take a hit, but at the same time, the longer-term effects of demonetization in terms of impact on SMEs and the consequent impact on employment and job creation could, in some ways, hurt demand as well going forward. So we'll wait and see for Q3, which is going to be a crucial festive season for us in terms of how the demand's picking up, and then we'll take a call.
Well, let's hope it comes in sooner rather than later. Pramod, thanks so much, though, for taking the time out today and joining us and giving us your perspectives on Bloomberg. Quint, must say, just before we take that break, Bharti Airtel is that big mover, 6.5% higher, though Infratel is not disappointing, up 4% in the session today, and it's trading close to or at the high point of the day. So big move there for Bharti Infratel. Stocks like Sundaram Fasteners, Hindustan Construction, Manappuram Finance, Canfin Homes are amongst the others that are doing rather well for themselves. But on that note, we slip into a short break. Up next, we discuss a whole host of corporate stories, including the impact of global aluminum rally with TK Chand of Nalco, business outlook with Suresh Venkatachari of 8K Miles, and we talk to the new kid on the block, Dixon Technologies. Atul Lal would be joining us on the show.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people. Aluminium producers could not have asked for a better year, with prices rising as much as 27% over the last 10 months. Nalco is, of course, one of the biggest beneficiaries of this price rise. Will the trend continue? And perhaps more importantly, will China stick to its low production going forward? Joining us to talk about the metals rally and what it means for his company is the chairman and managing director of Nalco, TK Chand. Good morning, Mr. Chand. Welcome to Bloomberg Quint. What do you make of the big price rise we've seen in aluminium over the last several months? And is it your assessment that this will continue?
Yeah, good morning. And the aluminum market is right now a bit, and this is mainly this positive sentiments are driven by short supply in global market as well as cost push factors. Short supply is mainly arising out of this China cutting down production in some of its smelters on grounds of pollution and also closure of some of the illegal smelters. And with that also there is a pickup in consumption in North America, and this has brought a situation of short supply in the market, which is pushing the price. Most important thing now is the cost put factor, because alumina prices have gone up, then carbon product prices have also gone up. That also is giving a push to the aluminum price. And as I see that in the coming quarter, that is Q4, there will be a deficit in international market, maybe around to the tune of around 0.5 million ton, and that will have a positive impact on aluminum prices to continue to move. And maybe the prices will move in a band between $2,100 to $2,200.
Sir, good morning. So what is, according to you, the inventory situation looking like, say, 6-12 months down the line from what you read or what's happening in China in terms of supply cuts, and also factoring in the fact that at least in the global market, demand conditions seem fairly robust?
Global inventory position has come down because from 8 to 9 million ton, it has come down to 6 million ton. But there is a risk to the price from the unreported inventory. It is also understood that around 5 to 6 million ton of unreported inventory is there. In case it surfaces, then it will be a risk to the price. But as such, right now global inventory position is low, and that will also give a positive impact to the price situation in aluminium.
And what is, sir, the import situation from China into India? I know that China's export data suggested that aluminium exports are down. As far as the Indian market more specifically is concerned, what have you been seeing for the last 3 to 6 months?
Yeah, as far as export is concerned, India also export aluminium, and import is concerned, India also import from China and some other countries. And by and large, out of our total import, 50% import comes from as a scrap, and others are in terms of the ingot and the value-added product. But there has been a little slowdown in the import because in domestic market, ramping of production has gone, and production has increased, and that is also sales in the domestic market is going on. That's why I see that with this difficulty in China and in consumption of domestic consumption of China going ahead of the production will have a dampening effect on export of China to Indian market.
Mr. Chand, what is your new project pipeline looking like in terms of additional capacities? The last we heard was that I think you had decided to drop the 15,000 crore alumina project in the region of Kutch. Can you give us a sense of what maybe some of the future projects are?
We are right now going ahead with our alumina project in Dabanjodi. It is a project of 1 million ton of alumina, and there all the environmental and all statutory clearances have been obtained. The project cost is around 5,600 crore, and it will add around 1 million ton of alumina to our capacity. And as far as the smelting capacity is concerned, we had earlier planned to put a smelter and a refinery in Kutch region, but after a lot of study, we found that enough of bauxite is not available to supply to the refinery, and it may not be commercially prudent to put a refinery and smelter when the required quantity of bauxite will not be available. That's why, based on our project report where IRR was very low, so we have dropped that project. But as far as our brownfield expansion is there in Orissa, where we are having our smelter. There we are going ahead with a brownfield expansion with latest technology. Around 0.6 million ton capacity will get created there in smelter.
Does this recovery in metal prices over the last several months encourage you to look at new projects in any fashion, or do you already have enough on your hands?
Yeah, as far as fund is concerned, we are having our internal accrual, and we are also having...
In terms of new smelter capacities, new projects, does the recovery in metal prices encourage you to want to look at new capacities, or do you feel that you have enough brownfield and greenfield expansion in hand right now?
Yeah, but as far as recovery in metal price is concerned, this is one of the positive factors. But before that also, we had planned to go for expansion because market positions changes with at a different point of time. So project planning is generally made based on the market study and a long-term prospect point of view, and capacity of the industry to finance the project and also to go ahead with the project. So, increase in metal price is one of the positive factors to expedite the project.
Okay, I have one final question, sir. I know that you recently announced a new business model plan in which you said that you are going to look to diversify into areas such as green power, caustic soda and merchant mining. Can you give us any update on where you are in this plan and what kind of contribution to revenue or bottom line you're expecting from these new lines of businesses?
Yeah, we have introduced a business model where we are strengthening our existing alumina arm by putting 1 million ton refinery, and in smelter revenue segment, there we are trying to reduce the cost of smelting by increasing the volume with latest technology smelter. And diversified areas like caustic soda plant, we are putting it in Dahej of Gujarat, where we have already gone ahead with the project, and land, water have already been secured, and technology selection is over, and all the tendering activity are on the final stage. So the groundbreaking will start within a month or two, and it will be completed within 18 months. And that will be a very good project, because caustic soda is a critical raw material which is not.
What will be the contribution of all these new businesses to your top line or bottom line?
All these businesses will give, because these diversified projects are immune to cyclic turn of the market as metal goes. So therefore, it will give a cushion to us, maybe around these diversified projects will be giving us around 250 to 300 crore net profit added to our bottom line.
We appreciate you speaking with us this morning, Mr. Chand. Thank you very much for the update on NALCO. Looks like aluminium prices might still continue to rally for a few months to come.
Yeah, and he might benefit out of ancillary businesses as well. But let's shift focus to technology. Now, 8K Miles Software Services is a leading cloud solutions provider working in highly regulated industries like healthcare and life sciences, BFSI, manufacturing and media. There is an industry note or a research report that had come out which said that cloud servicing is expected to be a $9.5 billion industry by FY20, predominantly in the healthcare vertical. So what are the possibilities of opportunities in this space, and how will 8K Miles grab those? Suresh Venkatachari, Chairman and CEO at 8K Miles Software, joins us right now on the show. Suresh, good having you. Thanks so much for joining in. Yes, the opportunity is immense. I think if I look at all brokerage notes, they say that from the current revenue size that you have, you aim to reach $200 million in the near term and eventually $500 million as well. So you clearly believe the opportunity is there for the grabs. Share some timelines and share how will you indeed manage to reach these levels of revenue targets that you have set out for yourself.
Thank you. The cloud industry itself is growing tremendously at a 26% compounded annual growth compared to the traditional IT. And the cloud adoption is happening a lot in the life sciences and healthcare industry, where we help large pharmas and hospitals to move into cloud. So where we see a great opportunity in those market, where the cloud adoption as of date is maybe 10 to 15%. So there is an 85% growth inside the organization over the next 3 to 6 years period. And also when the workloads has to move onto the cloud, where we see an opportunity to earn a recurring revenue, annuity revenue in terms of manage those infrastructure on the public cloud. So our core expertise is on the security compliances on the public cloud. And we see there is a tremendous opportunity where the cloud becomes a biggest innovation will help these companies in terms of IoT or mobility, where a lot of IoT devices going to generate a large amount of data, then the cloud is a way to solve the problem. So that's why we believe a great opportunity exists for 8K Miles.
Okay. How much of your revenue growth will come in from mining the existing clients? What would be the set of new clients that you would target? And what are the timelines from, I believe the current revenue is sub 100 million. By when do you target $200 million in revenue?
So we really look at between a 24 to 30 months period, we want to grow to $200 million revenue. So we really look at the existing accounts or like a Fortune 100, Fortune 500 clients where they have used the cloud only. The cloud spend itself is about 10 to 20% of the spend of IT spend. Where we believe in the next 3 to 4 years, they will spend at least 80% of the IT spend on the cloud. So the internal growth in the accounts will be a major significant growth for us. And also every quarter we are acquiring a couple of new customers. in the Fortune customers. And also the SMB sector or the second tier of pharmas will also adapt the cloud over the years. In terms of the hospitals, we are providing a hosted EMR service on the public cloud, where we see a great opportunity where much more recurring revenue, annuity revenue in terms of hosting the entire electronic medical record or electronic health records for these hospitals.
Suresh,
and also it provides an opportunity. Yeah.
Suresh, a couple of questions. I mean, what's so special as to why Fortune 500 or Fortune 100 clients should come to 8K? Because I hear almost the large tech companies also trying to do the same thing. Conversations with TCS and HCL Tech seem to suggest that they are trying to get into the same line as well. Why would these large companies come to you? How many Fortune 100 or Fortune 200 clients do you have? And two, the market doesn't seem to be quite believing your story, Suresh. It's a compelling story, but if I just look at what the street has returned or the stock has returned the last 1 month, 3 months, 6 months or 12 months, it's not been particularly great. Why is that so?
So I think you asked multiple questions. Let me tell you this. So you should ask why the large Fortune companies, the CIOs, you should talk to them why they hire 8K months. Because purely we are a niche cloud vendor. We have a Cloud Easy platform and Automaton, which is a software which automates the cloud migration and cloud managed services. So we are an innovation. Why the street couldn't understand is the street couldn't understand in terms of because they normally traditionally understand with IT people. Okay, number of staffs, number of employees you add every year. That's how they see the growth. Whereas a cloud is not about people. Cloud is all about innovation. Today, I would say the top 5 pharma, 3 pharmas already work with us on the cloud transformation. Where you mentioned some of the names, they also work there on the remote infrastructure management. But on the cloud side, AKMRs is the vendor of choice. So we are a niche vendor to this large pharma because we have a platform which delivers them a cloud migration very predictably and also to leverage the cloud to reduce their operating expenditure as well as capital expenditure. So customers believe a predictability. That's how we grown with one of the large pharma. We build a real world evidence analytics, and today we become the center of cloud competence. So we offer solutions in that perspective. So we had a first analyst meet last week. That's the first time analysts could able to really understand what we do. All along they always evaluate because they always want to see the metrics. The India is predominantly a services industry. Everybody look at IT. IT is the number of people you add every quarter, how many freshers you add. This is not about people. This is about automation. That's a big difference.
Okay. Suresh, my final question to you. If I look at the last 4 or 5 years, I think your revenue growth has been pretty good. Margins have stayed okay, but your free cash flow has been very, very patchy. Maybe you need to have had to develop new IPs or you've made acquisitions, I think 4 or 5 in the last 5 years. Would the improvement in free cash flow be something that we'll see in the near term or will it take some time?
Yes, it is actually, if you see this year, March 16, 17, we have a positive free cash flow, actually, if you see, compared to 15 or 16. So we continue to spend innovation because innovation is critical, but however, with our growth, we will have a positive free cash flow too.
Okay. We wish you all the best for that, Suresh. And we'll talk to you sometime post your results as well. Thanks so much for taking the time out and joining us today. That's 8K Miles, fairly hopeful of reaching the targets of $200 million from a current sub $100 million in about 24 odd months. They've done that in the past, not saying if they can do that in the future or no. These are the targets that they've put out for themselves.
All right. Flipkart has recently launched its in-house consumer durables brand Mark, and the company that's going to be making some of these products is Dixon Technologies. Joining us to talk about this deal and the broader outlook, Atul Lal, Managing Director at Dixon Technologies. Atul, good morning. Thanks for joining us. Any details you can share at all on this deal with Flipkart? Is there a commitment to provide a certain amount across certain categories, or if not, are you hoping to garner a certain amount of the share of sales?
Well, for us, it's an extremely important relationship, and we feel it opens up a huge window of opportunity for us because that's the way forward on the e-com platform. Strategically, it's important for Flipkart, and we've been the back-end suppliers across the consumer durable category. So what we started off with was a television. I'm sure it's going to be a large business for us. I'm sure it's going to be extended to the other categories in which Dixon operates.
So for starters, it's only televisions, is it? But that, I mean, how much of that business comes via the Flipkarts? I mean, how much volume are they doing in the television category particularly?
You see, it's just a very initial stage, but I'm very sure in times to come it's going to be a large business. At present, it's a small portion of our television business. It's going to be around. It's a smaller number, but it's just taking off. So I'm very sure that in coming months is going to be a very significant opportunity for us.
Okay. No numbers or anything that you can give us in terms of how much you would hope to channel through this particular segment. The e-commerce segment more broadly, if not just Flipkart.
Yeah, you see, we please appreciate that our strategy is that we have a diversified portfolio of customers, and the various e-commerce platforms, the various when they're launching the private label, we want to be a part of that story. It's a part of our overall strategy to diversify our portfolio of customers, and e-commerce is going to be a very significant platform for that.
Is this what you'd call the ODM business? Are you involved in designing this as well? Is this a higher margin order than you would get from, let's say, any of your other regular customers?
Well, this is an ODM business. These solutions are designed by Dixon's team.
So that logically means higher margins, I would imagine.
Well, I don't want to make any such a statement, but obviously in our case, which I have shared on various other platforms also, that one of our focus areas is going to be to migrate more and more to our own design solutions, because that definitely improves our numbers, and that's a part of our overall strategy.
Okay, fair enough. I think we've read about that or heard about that before as well. Since you're cagey about specific numbers, let me ask you a slightly broad, open-ended question on where you see demand right now. I think brokerage reports have suggested that you've grown at about 34% on your top line, compounded annual growth rate for the last several years. What's the next few quarters looking like, and what's your outlook for this fiscal?
Well, we feel that the growth numbers are going to be in line with our earlier years. We are already out of the pressures of GST, which was happening in the first quarter. We also feel that now there are all the tailwinds that are required in the business. I don't see any more aberrations taking place. So we feel that we're going to be having a very good growth in this fiscal as well.
The question is, Atul, whether companies such as yours are at a stage where the Foxcons and the Jabils were a couple of decades back. Do you foresee that this 25, 30, 35% growth rate is something that you've enjoyed for the last 5 years and will continue for the next 5 or 10 years, or is it very, very difficult to say that right now?
No, we are confident about it.
So you would reckon there is a decade of 25% CAGR
we have
growth?
Conviction of this kind. Well, I cannot talk about a decade, but I feel that next 3 to 5 years, this kind of growth is there on the horizon.
Okay, fair call. The other bit I think that we were trying to get from you on the margins. Now, I looked at the numbers. TVs, lighting and mobile phones. Correct me if I'm wrong, they are about 75% or 80% of your revenues, but they are wafer thin margins. Washing machines, which give you about 16% EBITDA margin, if I'm not wrong, are just starting off for you. What do you think your consolidated EBITDA picture could move to from where it is currently to over the next, say, maybe 3 or 5 odd years?
You see, in our kind of business, and globally that's the way it is, you should not look at the margins as a percentage of revenue. Please appreciate a large part of my revenue was a pass-through turnover. you should look at my financials on the basis of return on the gross blocks, on the return on capital employed. So in absolute terms, the EBITDA and PAT growth would be significant, just like the way it has been in the last 5 years. As a percentage margin, it doesn't mean anything much because a lot of turnover is passed through. We don't look at our financials as a percentage margin basis. But on the growth basis, on all the financial parameters, let me assure you there'll be a significant traction.
Are you showing that for sure? The market is liking what you've done on listing. Hopefully, you'll clock in numbers better than what the street estimates. Thanks so much, Atul, for taking the time out and joining us. And all the best for the quarters ahead. That's Dixon Technologies speaking on the recent Flipkart deal and more. Can't share some numbers, but confident of about a 25% odd growth in the current fiscal, as also for the next few years. That's Dixon, guys, but I tell you what, it's telcos and it's the Tata Group which is holding the limelight. I was looking at the Nifty 50, Bharti Airtel, Bharti Infratel, Tata Steel, a couple of percentage points, and TCS, surprise, surprise. I am surprised.
The margin numbers were good. I don't know why you're surprised. They were good, and they were good when nobody was expecting them to be better. So you know, that's always a nice thing to happen, right?
But 18 times with constant currency revenue growth, slightly subpar.
Yeah, so it was less than 2%. Volume growth was not very good, but you know, these are difficult times, and in difficult times, if you're able to manage some degree of, you know, better performance than expected, I suppose it just bumps back up into your stock.
It'll be interesting to see what Infi does now, right? Last quarter they beat
TCS, yeah.
This quarter TCS has set up the bar on the margin very high.
But not very high. It's still below their cited band of 26 to 28%. So there's no question of that. But you know why Infosys is more interesting than just the relative performance to TCS? It's the first quarter under Nandan Nilekani. So that should be fun to watch as well, to see how much order and calm he's brought back to the business, if any at all. But look, we'd love to stay and chat, Neeraj. Unfortunately, as the producers remind us, we've got to wrap it up here on Indian Open. Up next is the F&O show, so stay tuned to Bloomberg Quint Live.